I've been able to build up a property portfolio of 4 investment properties by the age of 27. So here are the 5 steps to buy one for yourself. Step number 1, save for a deposit. Now the deposit amount will depend on what you're actually buying. This can vary. If you're buying a owner-occupier home, this might be a little bit more for the deposit as compared to an investment property. So let's take an example. If you're looking at buying your own home and it's worth $1 million, and let's say you put down a 10% deposit, you'll need to have at least $100,000 just for the down payment to get yourself an owner-occupier home. Along with this $100,000, you will also need a $30,000 payment for your LMI. Now, LMI is lender's mortgage insurance. This is insurance that protects the bank, not yourself, because you may default on your repayments or you may default on the loan completely. Lender's mortgage insurance only comes into play if you've got a deposit amount saved up, which is 20% of the purchase price. Now, it depends on the loan to value ratio. If the loan is higher in terms of the value of the property, then obviously your LMI goes up. And obviously if it's the other way around, then your LMI decreases. The pro to paying LMI is that you are able to enter the market quicker. So by paying a 10% deposit and paying LMI, you are actually essentially saving yourself some time, because then if you don't pay LMI, which a lot of people may argue is a waste of money, why would you pay LMI when you can just put down a 20% deposit? That may be all well and fair, but you need to wait to enter the market then. So you need to, instead of having a $100,000 deposit saved up, you'll need to have a $200,000 deposit saved up, which again, time in the market is more important than timing the market. So it's just up to everyone and what they believe works well for them. I personally paid a 10% deposit because I wanted to get into the market as soon as possible. Now, there are certain groups of people who are exempt from paying LMI. These people can put down a 10% deposit and get away with not having to pay it. So these professions include people who are in the medicine field, if you're an accountant, if you're a lawyer. Just speak to your mortgage broker to see whether you qualify for this. Now that we know we've paid $100,000 as a 10% deposit, we've paid $30,000 for our LMI, the next thing to consider is your stamp duty. This is a certain form of tax that the government charges on purchases that are made, for example, buying a new home, buying some land, or buying an investment property. The amount of stamp duty that you have to pay depends on a few things. One being the location of where you buy your property, and 2, the value of the house. So taking our example, for a $1 million property, for example, in New South Wales, you'd have to pay around $50,000 in stamp duty. That's if you're not eligible for the first homeowner's grant. And in this case, if we're buying a $1 million property, then we are above the threshold for the first homeowner's grant. For you to calculate stamp duty for yourself, you can go on online calculators, or you can speak to your mortgage broker around this as well. The next cost associated with your purchase is getting a conveyancer. A conveyancer is someone that you definitely need by your side, because they'll be able to prepare the paperwork for you. They liaise on your behalf with the seller's side and their conveyancer. They also communicate with the bank and your mortgage broker as well, so that you don't need to get involved. They essentially take care of the paperwork, and they do the transfer of titles and the purchasing of the property for you when it comes time to settlement. They also ensure that the contract that you are signing is legitimate and that you're not going to get scammed in any way. So for a conveyancer, you need to factor in costs up to $5,000. An additional cost as well, which you may want to factor in, is getting a pest and build report done. This is something I've done for my investment properties, just to make sure that the building is structurally sound. It's not going to fall apart the next day. And you also want to make sure you check for termites as well, just to make sure that you've got peace of mind in the purchase that you're making. Now, this can cost up to $1,000. So if we add up all the costs associated, we essentially get to around $180,000 to $200,000. So this is the first step. You want to make sure you've got an adequate amount of money saved up before you do decide to make your purchase. Now, of course, these are the costs around a $1 million owner-occupier property, whereas if you are looking to buy an investment property, these costs may be lower, and you can enter the market at about $350,000 to $400,000 as well. An additional cost as well, which you can consider, is that of a buyer's agent. Now, a buyer's agent works just like a real estate agent, but they're on the seller's side. A buyer's agent will work for the buyer. So they'll help you to find a property that matches your goals, your needs, and is aligned to your values and financially as well. So if you're looking at getting one for yourself, you need to factor in about $15,000 for a buyer's advocate. If you need a buyer's advocate, I'll actually link one down below in the description box. Step number 2 is to finally speak to a mortgage broker. Fun fact here, mortgage brokers don't actually cost you a single penny. They are actually paid by the bank, and because they are accredited across multiple banks, so they'll be able to provide you with the best rate possible for your scenario, as opposed to you going into a branch tomorrow, going to CBA or Westpac. They'll provide you with a rate that they currently have, and that could be higher than other competitors out there. So when you go see a mortgage broker, for them to assess whether you can borrow and how much you can borrow, and whether you can even service the loan, they'll ask for a few pieces of documentation. This includes bank statements, a few pay slips. They'll ask for what additional incomes you've got, what are your liabilities, so for example your credit card if you've got one, or your personal loan, car loan. And they'll also ask you to provide a budget for your household expenses as well. For example, groceries, petrol, discretionary spending. So once a mortgage broker has all this information, they will then assess how much you can borrow. You don't need to borrow the full amount if you think you can't actually service the loan. And you also want to be mindful as well of interest rates, as well as they are increasing, your repayments will also increase. Also, what you can do in terms of high interest rates, if you haven't fixed them, is that you can opt to just pay interest only as opposed to principal plus interest. Speaking to your mortgage broker and getting those numbers to you can take about a week. Step number 3, once you've gotten your pre-approval from the bank to outline how much you can actually borrow, the next step would be to buy your property. Now, if you're looking at buying an investment property, you would then need to maybe consider a buyer's agent. So a buyer's agent is someone, as I mentioned, who will take out the guesswork in finding a location for you, something that provides a strong financial return for yourself. However, if you're buying a home for yourself, you may not need a buyer's agent, as this is something which is an emotional purchase and you don't really care whether that's going to bring you a great return or not. But if you are, you can also still speak to a buyer's agent. Certain buyer's agent, like the one I've mentioned, which is down below in the description box, can also help you with conducting your pest and build reports. They can also help with finding you a conveyancer, and they answer really all your questions along the way so that you feel like you've got someone by your side. And if you're going through this process alone, it definitely doesn't feel overwhelming. Now, once the buyer's agent has found you a property and you're happy with it, you will then put down a holding deposit. This is usually 0.25% of the value of the property, and this is just so that the property doesn't go to someone else in the meantime. Next step of this process is to get your unconditional approval. Now, previously we had our pre-approval, which is our conditional approval. Now you'll be able to get unconditional. The mortgage broker may ask for some updated pay slips, some updated bank statements, if it's been quite some time before you engaged them in the beginning. Once they've done all their checks and balances, they'll be able to give you the unconditional approval, which essentially is the tick of approval, and you'll be able to go ahead and proceed with your purchase. Next step is settlement. This usually is about 4 weeks from you getting your unconditional approval. The settlement process is essentially where you will then have to pay the remainder of your 10% deposit. So you want to make sure you've got enough money in the correct account so that that can be debited. Also, the transfer of title takes place, and this is also where your loan actually gets initiated, and you can see that in your bank accounts. Now, your conveyancer is the person who takes care of this, so you've got nothing to worry about. They liaise with the mortgage broker and the bank as well to ensure that this gets done, and all you have to do is sit back and wait for that to happen. So there we have it. Those are the 5 steps to get yourself in the process of buying your own property, whether that be owner-occupier or an investment property. If you've got any questions around the process at all, leave them down below. I'll be sure to respond. And if you want a breakdown of all the properties that I've purchased and how much they've costed me, then be sure to follow me over on my Instagram and my TikTok. I've done a full breakdown analysis on there. And don't forget to subscribe to my channel, and I'll see you guys in my next video. Bye guys.